Good morning, fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for April 12th, 2018. Hey folks, if this is the first time you've seen these videos, please do me a favor, click that subscribe button on YouTube and the follow me button on Facebook. Click those thumbs up buttons. They really help me a lot. I appreciate it very, very much. Thank you to everyone who drops these wonderfully kind comments on the videos. I do appreciate that. And please feel free to share this video with any friends and family that you may find that they can get a benefit from it. This morning we're looking at a market that is just really kind of conflicted. I think I get the sense that the market really wants to go up ahead of the earnings, second quarter earnings that are set to really officially kick off tomorrow with some of the big banks, but we have this looming question mark in the potential of a military conflict with Syria. And of course, that involves Russia in defense of Syria and the United States getting involved in this saber-rattling campaign that could certainly disrupt things. Now, the question that we have is, as we approach a weekend, and notice yesterday we gapped down 200 points. This morning we're gapping up more than 100. This daily flipping back and forth in the overnight session makes holding on to any edge or even having an edge in your trading very, very difficult to establish, and has made this market extremely challenging. So the question is, are you interested or willing to take risk ahead of a weekend with this looming conflict? Now, they do say, they always say fortune favors the bold, but that's a lot easier to say than it is to apply when you're risking your capital, your retirement funds, those kind of things. It is a different question indeed. So what you have to do is, I believe, is we have to find those really good looking charts and consider if you are going to trade, possibly trading smaller than you normally would, taking half positions or something like that to help manage that additional risk. If you see those really good trades set up that you feel that you should hold or get into prior to the weekend. For those of you that decide to stand aside, there's nothing wrong with that either, because what we're really looking for here in this chart, this obviously the diamonds chart, we really need to see this break that downtrend. Break the downtrend and prove it can hold it as support with either a consolidation or a pullback, and then have buyers step in here. That would give us a much better place to enter the market without taking such substantial risk. And also keep in mind that we're still well below some major resistance points here in the market that could really challenge this market. So you're going to have to make a tough call for sure if you decide to trade as we head into this weekend. The spiders here, same thing. We're not out of the woods here in any way, shape, or form. Still beneath this downtrend, still have these resistance zones that we have to deal with in here, and the daily flip in that overnight market certainly makes this a very, very difficult market to trade. Take a look at the Qs. The NASDAQ performing just a little bit better, having broken this little downtrend. And now the Qs need to rest or consolidate or pull back and hold that support and see buyers stepping in. And this morning we have a pretty decent pattern. Notice that we didn't hold the day yesterday, but we didn't really sell off yesterday. So the Qs are actually popping up here, showing some strength this morning. That is a positive sign, I think, currently for the market. And then IWM IWM also showing strength yesterday, actually following through. The one index that actually followed through yesterday, and 2 days in a row going in one direction. That's kind of nice to see. And this morning, we're gapping up. So the small caps seem to be doing quite well, or doing better than the rest of the market. But please keep in mind, we are still beneath this resistance right here that we're going to have to pay attention to. And we have now broken through that 50-day moving average. We need proof that we can hold up here. Notice that 50-day moving average is still declining. We need that to start to round out and hold up in this area if we're going to actually make that move higher. So IWM right now seems to be the leading index, showing us more strength than the others at the moment. So kind of keep that in mind. Now, another thing to consider is the VIX just stubbornly continues to hold on to price support and the 50-day moving average. It does not want to give it up. This morning, we might see that give it up just a little bit, but doggone, it just holds on. And so holding above a 20 handle, we have to plan into our day, plan into our trading the risk of that additional volatility. So I think even if the market does improve here, expect that we could see some very choppy price action, quick reversals, fast prices could still continue with the VIX hanging around at this level, unless it finally starts to break down. And then T21, 22, the 4-week new high, new low ratio. You know, I love this indicator because it's so stable in that, you know, it has, you know, bearish reversal zones and bullish reversal zones, and you can see how consistent it is. And we're up here now, approaching those highs where we could see that bearish reversal zone come into play. With this gap up this morning, if we continue to push higher today, we're going to be up in here in this area. Now keep in mind, we can stay up here for a while. We don't necessarily have to just pop up there and then completely reverse, but we're in that zone where we have to be a little bit watchful for that potential of profit taking, a little bit of pullback. So crazy markets, to be sure, difficult trading, to be sure, and it's a tough call whether you decide to put some risk into this or not. If you do, I highly suggest you have a well thought out plan and a method of protecting your risk in this trade. And that may be just, you know, taking smaller positions to manage some of that risk. On the economic calendar today, we have weekly jobless claims coming here at 8:30, as well as import-export prices. Those are the only two real market-moving events on the calendar today, and both of those are expected to be pretty good. Notice we have a Fed speaker down here at 5 o'clock p.m., but everything else is, you know, bond auctions and economic reports that are unlikely to move the market today. We've got about 25 companies reporting earnings today, so kind of keep that in mind. And remember that Friday is the official kickoff to second quarter earnings, when we have several of the major banks reporting. So keep that in mind. The market at times can just be slow and choppy ahead of some of those bigger earnings reports. So keep that in mind as well. Everyone, I want to wish you a fantastic day, wish you great profits. Again, do me a favor, click those subscribe buttons and follow me buttons. I really do appreciate that. Everyone, take care of yourself. I wish you great profits, and I'll talk to you all very soon, bright and early, Friday morning. Take care now.